I do have already a video of the trades that I personally took and the P&L and my mindset on how I view things and etc etc. But I always do over the weekend kind of like re-go over price, take notes, and really try to understand what could I have done better, how much more patience could I have shown, how much more grace I could have had on myself, and just really use it as an opportunity to learn while the markets are closed. I do also look at crypto, but there is a time where you should really look back on the day and really self-reflect on what you could have done better. So I think that is something that is very important if you want to continue to grow as a trader. Moving into 2025, I think everyone that is serious about leveling up their ability to look at the markets without having your heart beat really fast or having anxiety or anxiousness on missing a trade or wasting a day, just really be able to look back. And I think that training, when you look at the day after the fact and just remind yourself, if I would have been more patient, I could have taken this entry. If I would have been a little more patient, I could have taken that entry. And the end result is patience. How much more patient can you be? How can you deny yourself the dopamine rush of entering in that trade? And I think that's something I am working on as well. I do love to jump into the trades either prior to open or right at New York Open to take advantage of that volatility, because of my aggressiveness of using a really tight stop loss and a really aggressive trailing with my risk management. So going into the day, we're pretty much going to start at 7 a.m. and I do notice on my channel my quality of my videos for some reason are not as good as they should be. So I am going to try to zoom into the candles a little more. So we start at 7 o'clock and we do definitely want to look at our M15 like we're told. So I see that, okay, sorry guys. So our kill zone is here right at 7. So prior to that, we had a low here. We had a low here at 3 a.m., a low here. But this low being at an actual hour, I see that here. So right at 6 o'clock, let's start. Right at 6 o'clock, we see we had a low here. And we have this low here, this high. So we would be coming into our 7 a.m. with that low marked out and that high marked out. You can also have done this low here. As another point of interest. Now, based off this order block here, breaker structure, I am just taking into consideration that we are in a bullish price action, price action is bullish. So even without having any information from anywhere past this chart, these candles here, and I only have this to determine where our projection or our market structure is going. I just would mark out that this low as well, this one. These are the only two I would really be thinking about going into 7 o'clock. So let's drop down to the 5-minute. So that was that low and that low. And as we got more detail, we enter 7 o'clock and we immediately run slow here, creating a breaker structure to the downside after this market structure shift. Market structure shift all the way down, came up, came down again, giving us that market structure shift and also liquidating. So if we were already determining that our price action was going to be bullish based off that one order block here on the M15, I would assume that we are manipulating to liquidate, because if the higher time frame order flow is bullish and I do get some type of liquid like market structure shift to the downside, I won't automatically assume that we are going to completely reverse down. I would first see, okay, so this may be a market structure down to the downside, but I would definitely have to see price action go down, continue back up, and then give me more confirmation that we were going to continue to move down. But that did not happen. What happened was we moved down and then we came back up, and this is where patience goes into play, because you could have immediately see it tap into this fair value gap, sweep, kind of consolidate and attempt to try to take another short here, and then price came up, wicked again, and all these rejections here. If you're the type to draw out, and I see many traders do this, they draw out their fair value gaps and they just continue to see rejection, and then by the last rejection they're like, there is no way price is going to continue up, let's go ahead and short this. And then they'll get in short right at the last moment like this, and they would just be destroyed, whether they put their stops above that high, whatever the case may be. So I think that is something to take into consideration. But like I said, just because I see a break structure to the downside does not mean I will automatically assume we're going to start pushing down. But if we expressed our patience, we would have saw a market structure to the upside, as well as you see something like this as well, market structure shift to the downside. Then we push up, we come down, but we never break that low here. Then we push up again, and instead of breaking that low, we break the high. So it's the market structure shift, break a structure, and this is also a market structure shift to the downside. So this market structure shift, after seeing this, just told me that this was the liquidation of sell side before they wanted to continue moving upwards. And we didn't get that confirmation that this was just sell side liquidation until we got the market structure shift, or breaker structure first, market structure shift on the higher time frame as a swing point. So we get here, we see the liquidation here, we see consolidation, and then we see our push up. Now in this case, we would draw our discount here after the raid, and this is the 5 minutes. So we did our analysis on the 15. We saw what was going on the 5. Then we jumped down to the 1 minute. And also we had our, should draw OTE. We tapped in right at the 70, as you see here. I know these numbers are super small, but we barely wicked. Let's just see if I have it 100% accurate here. So right at that high, and then we'll go down to the low, and we'll fix this to be right at the low. So it tapped in, wicked right at the 7.705, came back, closed above this candle here, and then we started to push up. We have a breakaway gap there. We have a breaker structure to the upside, market structure shift to the downside. So this would have been a bearish breaker. I believe. Nevertheless, so we break above this high at 920, and this is where we get our first entry into a fair value gap after our market structure shift. Would have been a perfect entry right there. Stops above below this M15, so it's an M15 fair value gap with a 1 minute fair value gap overlaying there. Then you could have targeted your 1 to 2, and you would have been able to, as you see in my video of my recap, you saw that I entered somewhere up here and I just got wicked out, and then price went away. So I just, after getting wicked, I just entered into my scalping protocol, and we took the money anyways. We took the money anyways because we weren't going to just let it, we weren't going to let that slide. But if we were able to just take a deep breath, be calm, we would have understood that there was going to be another opportunity to enter into long positions in our favor, as long as we waited for another fair value gap entry. So this is the trade that we missed, obviously, because we were a little higher than expected. And if I would have followed the indicator alone, I would have been perfectly fine on my first entry. Normally I target 150 ticks, as you guys see in my videos, and stop loss is normally around 50 ticks, so that would have been my trade there. Second entry, second entry at 9 so this was 9:30. That's when we got the wick. Then we got our second entry here into a fair value gap only 5 minutes later exactly. So even if we missed the first entry, we could have tapped into this fair value gap as well here. That would have been another winning trade for me there. And that's what really, for me, I do like to stick with a set risk to reward ratio. Although sometimes you will see me just try to run for some more with my risk management set, but that would have been a good entry there. As you see again, it tapped right into this M15 fair value gap to go long again. But I wouldn't have traded this. I know we have a whole bunch of IFVG traders that would have taken this trade. Would have been an amazing entry for them there. But me personally, I would have wanted to wait for another market structure shift and trying to go to take another long position, because I was definitely bullish on the day. We did get an entry here because there was a small, if you guys can see it, there was a small fair value gap here, right there. So the indicator indicated a rejection. Price came in, came up, rejected, then started to come down. But I don't have the indicator to detect fair value gaps visually this low, although it will still give you a signal. It'll still give you a signal there that there is rejection off of that fair value gap, which can be changed inside the settings. So just in case if you're wondering why there's a random signal there, that's why. This price action here would have been kind of difficult to trade in my opinion. If you're just looking at the 1 minute, a lot of people don't have the access to the second chart, so they would never even be able to utilize this indicator to its max potential and really be able to see the market structure shift inside of here and the possible entries. Like for example, let's go down to the 15-second right now and show you that there were entries there. And this is just to prove the point that there's entries everywhere. Always, there's always an opportunity to get into the market as long as you're following order flow. See right here, this is the whole curve that we were talking about, and if we zoom in very closely, here is the market structure shift. Like I said, I know it's difficult to see because of the quality of the video, but you guys are gonna have to take my word for it and or join the Discord. If you do want to or interested in joining the Discord, make sure you just like, subscribe, leave a comment in the description so I can get that sent over. Also follow me on Instagram. That'd be the quickest way to get a hold of me for access to the Discord. So on the 15-second chart, we did get that market structure shift here after failing to take out this low. As you guys can still see, we are inside the M15 fair value gap. So we wick, we reject, we wick again, we reject, and we don't even make it to break this low here. So we get that market structure shift and we get that fair value gap entry. And because even if you did take this trade here, your stops would not be that bad. Well, technically it would be pretty, even at 100 ticks. It's not that bad. That's like what, 500, and if you're risking 1% on the 50k account, that's 1%. So there was your entry there. If you still wanted more confirmation and you were able to express that patience that we talked about earlier in the video, you would have saw market structure shift and then another market structure shift to the downside, market structure shift to the downside, another push up, and this is where you just have to follow market structure. So either one or two things at this point here on this leg, either one or two things is going to happen. This is going to fade and it's going to stop right here and it's going to reverse. We're going to end up here, and at this point in time we're just going to have to wait to see whether or not it takes that high